Hi, this is Sive Morten with the daily update on EURUSD. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit the ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Greetings everybody, welcome to the technical analysis of the Forex market from the ForexPeaceArmy.com. We'll continue to discuss the situation on the euro currency. Today the 17th of January. We start as usual from the daily time frame. Well, due to the holiday in the United States, there was no really solid price action during the previous trading session. So now we can see that market has bounced from the lower border of our broadening bottom pattern that we have discussed in our weekly research. And just to remind you, here we will search for the potential patterns or signals that market will either continue more to the upside or reverse to the downside and accelerate further to the downside. Well, very often the broadening bottoms becomes a reversal patterns, but for that purpose market needs to take out of that high. So market should accelerate higher, take out that high and proceed to the upside. Also, in the middle of this move we will get the additional clue that probably this will happen by the moving above the weekly pivot resistance 1. I do not have it on this chart, but the weekly pivot resistance 1 stands around that area, around 128. So if market will accelerate above the weekly pivot resistance 1, this will be already not quite natural for bearish trend. As you know, the weekly pivot resistances holds retracements on the bearish trend. If market accelerates further above the weekly pivot resistance 1, this gives us the hint that probably market will continue move to the upside, and this could become the reversal pattern, reversal point, at least in the short-term perspective. But currently market stands at on the other side. We said that if market will not reach the high border, upper border of this broadening bottom pattern and reverse to the downside, this will be the sign of weakness. This is the classical approach, you know. So if the market hasn't quite reached the upper border of any triangles and reversed in the opposite direction, this becomes the sign that market is weak, and this is the bearish sign, and market will continue move to the downside. So now we stand at the first such kind of area, since this is strong area of resistance, as you can see on the 4-hour time frame. That is the 4-hour time frame chart. You see the bullish divergence with the MACD indicator. 4-hour time frame chart trend has shifted to the bullish side. Also, you can see that's really fast acceleration. Although market was really thin yesterday due to the holidays, we said this is a really impressive bar to the upside. Market almost has hit this area by this single jump up. So that is a worrying sign for the bears. This is not very natural for some kind of retracement. If market is really weak, shows some thrusting acceleration moves to the upside. But now market stands at really strong resistance. On the 4-hour time frame, you see that this is 50% of this strong bar to the downside, weekly pivot point, and first resistance, FIBA resistance 127.25 from the whole swing to the downside. On the hourly time frame, you can see that this is also the confluence resistance, since this is also the 618 resistance from that swing, from that high to that low. Also take a look that couple of agreements comes in that area. The first agreement from our yesterday's double repo or lookalike pattern, A, B, C bottom, market hit 100% retracement, 1618, 127.33, the 1618 extension from that pattern, A, B, C bottom. Another pattern you could get here, A, B, C bottom. Market also hit 1618 from that extension, 127.40. It's right here, precisely pips to pips. So market now turns to some consolidation around that strong area of resistance. Okay, so hourly trend also holds bullish. Since 4-hour time frame holds bullish and hourly time frame holds bullish, it tells that particularly that probably market has some potential chances to continue move to the upside, and you could act twofold. If you would like to enter on the short side of the market, you could make it by two different approaches. The first approach is drop your time frame to the 15-minute chart. If you will do this, you'll see that this is nice context for the potential double ripple or sell pattern in that area. Also, in that area, currently market in nearest couple of hours, I suppose, could form the butterfly sell pattern in that area. So if you would like to enter right from that area, then probably you should stick to these potential patterns. Search for the potential sell patterns in that area and trade accordingly and in agreement with these patterns. That is the first approach. The second approach is safer, but it will give you the worse entering price. So what is it an approach? Wait when the hourly trend will turn bearish. If it will happen, market should drop from that area to the downside. Wait for the hourly trend will shift to the bear side, and then wait for the nearest 3-8 retracement to the upside to enter on the short side of the market. That is the second way how you could act. If you are bullish, in that case, since this is really strong area of resistance that we have discussed, okay, market probably could show some retracement to the downside, and the level that I suppose should not be broken by the market to the downside is right here. This is our confidence support 126.85, 126.97. It's a bit wide, but still we could treat it as the confidence support. Well, also take a look. That is some kind of the classical support resistance area. Market touch it, show retracement, broken. Again, now it's resistance, 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 retracement, breakout. So that is the area that market probably should not move to the downside, should not break it to the downside if it really intends continued move to the upside. If market will break it to the downside, then probably hourly trend will turn to the bearish side. In that case, this will be not quite logical for the continuation, since this retracement will be too deep for the continuation to the upside. So that is a very crucial area for bulls. For bears, I said you could act differently. First potential is to enter on that pattern if market will start to accelerate to the downside, move your stop to the break-even. Second possibility, if market will accelerate down, probably will break that area, shift trend to the bearish side. In that case, you probably could start to enter on the short side of the market on the nearest retracement to the upside. That sounds a bit sophisticated, but in fact this is not very difficult to achieve. But our major concern now is the price action inside that area. If market will raise downside before reaching of that upper border, then probably we should expect deeper move to the downside. If market will accelerate above the weekly pivot resistance one, it's right here. This could tell us that probably this could come some kind of at least short-term reversal, and probably market could show some deeper move to the upside, some deeper retracement. If this will happen, the nearest target of this potential retracement will be area of the previous monthly agreement that we have discussed in our researches on the forum, because since market hasn't respected it during the downside move, it very often happens when market retested it from the other side after breakout. So that could happen. That being said, keep an eye on the clear patterns, keep an eye on the significant areas, and trade according to your trading plan.